Rob Clementi from Television Education Network. We're running our 6th Annual Agribusiness Conference in Melbourne on the 23rd and 24th of May this month. And one of the subjects we're talking about is ESG Investing and its implications for agribusiness. Our speaker who's with me today is Michael Linehan from Clayton Utz. Michael, welcome. Can you tell us why ESG is such a big issue for agribusiness, and perhaps start to unpack some of the complex issues that agribusinesses have to address in considering it?
Yes, thanks, Rob. I'll just say at the outset, I'm very much looking forward to the upcoming conference. It'll be great to be able to share it again, obviously, with people in person. It's always a great event. ESG monitoring and reporting is obviously a very, very topical issue at the moment. It's in the press on a daily basis, but in many ways, it's not a new issue. I'm sure many people will remember near on 20 years ago, the wave of corporate social responsibility reporting that companies were conducting in Australia. So at the heart of this is really that issue that mere compliance, as in compliance, tick the box with legislative requirements, is no longer sufficient. It's often rolled up in the concept of a social license to operate for businesses, given businesses and agribusinesses in particular have a significant impact from their operations on a huge range of stakeholders. The stakeholders for agribusinesses in particular, of course, can include shareholders and private business owners, employees, customers, suppliers, right through the supply chain, neighbouring properties, and indeed others who may be impacted by the waste products produced by a business. And so with such a broad range of stakeholders and so many ESG issues for consideration, it's often very, very difficult for businesses to know exactly how to approach the monitoring and reporting of those issues. But it is a critical area of risk management, and it's an increasingly critical area of risk management. In Australia at the moment, we only have a small number of areas where mandatory ESG reporting is actually required. Modern slavery is a very obvious one. But it's just going to increase. It's going to grow. We're seeing from overseas that there's mandatory reporting increasing, and we expect that will come here in Australia. In addition, Australian regulators are making it very clear that it is necessary for managers and directors of companies to take into account things like the environmental impact of their operations as efficient risk management. And of course, in these days of social media, where there's often a trial by social media when a business doesn't do something that seemed to be correct, the impact upon reputation, the damage to brand can be almost instantaneous and very, very difficult to repair. So at the conference, Rob, I'm really looking forward to unpacking some of these issues and helping people to understand a little bit more how they actually go about approaching ESG monitoring and reporting. We will look in some detail at a couple of areas, such as modern slavery and a lot of the carbon neutral issues, which are in the press at the moment. And then we'll talk more generally about how businesses can actually go about approaching this from the outset.
Michael, thank you very much indeed. That was a very useful introduction to what you're going to be talking about in a couple of weeks' time. For those of you who'd like to attend, you can find more detail on our website, download a brochure, and you can register online. We do hope to see you at the event. In the meantime, thank you so much for listening.